Welcome to this webinar on next-gen digital marketplaces. I am Marielle Barclay, the editor of this award-winning Global Treasury Leaders Program, which is organized by The Economist Impact and sponsored by Deutsche Bank. The program has two objectives. On one hand, to share thought leadership and to connect treasurers around the world, and to host content that will be shared with the global community through a series of activities every year. These include summits in different regions, webinars like this one you are joining today, articles, and an online community where we host all these contents. The community is open to corporates only, and this allows treasurers from all over the world to connect and exchange ideas on any topics of their interest. It is totally free, and I'm going to now send you a link via the chat facility so that you can join if you would like to. Just remember to choose the Global Treasury Leaders Network when asked what groups you would like to join. But going back to today's webinar, the idea is to make this session as interactive as possible. So please ask as many questions as you would like using the questions tab that is on the right-hand side of your screen. And please send them to us as soon as you think of them, otherwise you will forget. Well, we will bring them up when appropriate. But without further ado, please let me introduce this webinar's chair, Patrick Kunz, Managing Director and founder of Pecunia. Patrick, over to you.
Thank you, Marielle, and thanks for having me as moderator again. Welcome everybody to this webinar. The topic of today, next-gen digital marketplaces, treasury strategies for success. Let me quickly introduce you the panel of today. We're here with Mila, Head of Digital Treasury and Banking from BAT, Raluca, Head of Accounting from Smart Europe, and Matt from Deutsche Bank, Global Head of Embedded Finance Solutions. Welcome all. Without wasting time, let's immediately start going into the topic. Let's always start with the basics. How to set up a digital marketplace, where to start. Mila, let's start with you. You've set up multiple digital marketplaces. Please give us some context. What does this involve from a treasury perspective? Let's start with the basics. We can go into use cases later.
Hi everyone. So within, just for some context, within BAT, the financial service providers, whether they are banks or non-banks, sit as per treasury policy and as per responsibility with the group treasury function. Within BAT, we have digital marketplaces both for B2C, so that's obviously direct to consumer, as well as B2B, so from ourselves to our other corporate clients. So we operate with domestic models in those instances, and we need to take into a number of points into account. We operate in restricted categories as well as very new and emerging categories in a number of markets. So one of the key places that you would need to start from a treasury perspective would be to understand the nature of the product that you're selling through those channels, the sales flow, any claims or warranties made, any considerations around the marketing on the website, including where you may have, for example, age gating requirements. That's important for Treasury to also have an insight on because it will be important when dealing with those potential financial service providers as they bear a certain amount of risk and responsibility in that flow. And it's very similar to going through if you were doing KYC with setting up a new facility with one of your bank partners. And in fact, some of these partners may themselves actually be banks. So you would also really want to understand that flow and what they're going to be required. Don't underestimate the timelines that you're going to have to go through for that KYC. What you will also want to understand sort of at a basic level is this a material flow from a revenue and profit perspective, or is this more of a complementary flow, as that may impact some of the key decisions that you make. The payment methods that are targeted, which can be very in-market specific, if this will be cross-border or domestic only, and what those currency and settlement flows actually look like. At what point of the sale do they occur? And again, there are different legal implications, underwriting implications, as well as cash management implications, obviously.
It's like a whole list of tasks.
There is. We have a full list that we now go through, sort of as minimum requirements that we go through with the markets when they start to engage us, so that we can then, in a very flexible manner, understand what we're really trying to aim for that market that's fit for purpose, but within the preset guidelines for our risk management and our ways of operating.
So policy and a checklist, I like it. Thank you. Raluca, over to you. You did a digital marketplace project. What information and setup decisions were the most important to you during the process?
Yeah, maybe a few steps back, because Smart probably is not necessarily the first digital marketplace that comes into the mind of the people, but Smart, even if it's a brand older than 25 years already, back in 2020 we decided to go completely a different model, and we switched basically from a agent model to a direct to customer model. Therefore, we built a digital marketplace where we had to review the whole structure we had in place. We had to review with our customer, we had to review what's our product, as Mila was mentioning as well. You have to always ask yourself, where do we start? What's the starting point? For whom do we sell? What do we sell? How fast do we want to sell? What do we want to offer as payment methods? So Smart started this whole journey as a greenfield project. Therefore, we built everything with our PSP, with our partner together. I think that was a great advantage. We kind of found a partner that was willing to do the journey with us, willing to offer us the solution that we needed. We are active now in 11 countries. We operate in four currencies, and we have set up, in fact, 2 different models. But for us, it was important from the very beginning to look at the customer experience. We were a brand that was proposing now a completely new product. We needed, to a different customer that we used to do. So for us, the customer experience was very important when we built this, but we have to keep in mind that it's still a financial product. It's still there to support the sale. So for us, it was important that we have an efficient data transfer, an efficient reconciliation of the payment, so that the selling of the cars and the accessories is definitely smooth. We wanted something where we have the payment terms that are needed in the countries we were present. So payment methods, in the countries we were present. So it had to be very flexible. And of course, you have to look at the costs. We had to look at the structure we put in place. Does it make sense from cash flow perspective? The way we are building it, we had to, from the beginning, include all the stakeholders to make sure that what we built answers not only the business, but answers also the needs we had in the back, as us, the accounting function, as well as the treasury function. So honestly, the whole journey was kind of a journey that we took together with our partner, and that was the beauty of this project, and that was, I think, a great decision to build something together, and a solution that could fit what we were searching for, to offer a seamless journey for the customer, a completely online journey, and basically that could allow us to support the business that we were planning to start or to change to Swift. It was good that finance department was completely integrated, or let's say from the start, it was mandatory for us to be present. We were a part of the decision making. It was not an IT project. Treasury and accounting was part of it, and I think it was a great decision from the very beginning. Because it's good to look at what the customer wants, it's good to look at what the business wants, but we also need to be realistic. We need to build a audit-proof solution, a solution that is, ready from a regulatory point of view, internal control-proof, everything that you can think of. Yes.
Makes sense. So, quick conclusion: involve treasury and finance from the beginning. Key success factor. Quick question still to you, Raluca. from beginning, from nothing to go live? What was the timeline?
It was a crazy timeline, to be honest. We started back in 2020 just with the idea. Then it was a blank paper. Then we found the partner and we started with the building of the whole e-commerce platform from scratch. And it allowed us, of course, to put down what we wanted. And we started with the first country live back in October 2022. And since then, we are live in 11 countries. So it took us up to 2.5 years to build the entire eco platform.
Okay, no, yeah, makes sense. Makes sense. Matt, over to you. The bank's perspective. What's the role of the bank in all this? Obviously, payments, but also in comparison to a PSP. Yeah, happy to hear your opinion.
So thanks. So if you look at payment acceptance, it's not new, right? It's been out there for a long time. If you look at the different business models out there, like web shops and others, also there's nothing new, and there's like a lot of business are moving towards the digital channel. Marketplaces are kind of a different animal because they have a lot of more complexities that come with that, and they are a lot more customized if it comes to the delivery and to the implementation. They have a lot more touch points within the customer's organization, so treasury, accounting, but also the different business departments. So whereas PSPs kind of have or do traditionally focus on great user experience, easy integration, providing a number of payment methods, global reach, it's still a very much standardized offering. Marketplaces kind of require a lot more thinking around how do I actually manage the risk of managing multiple parties on this marketplace, and KYC and regulatory requirements are one thing, but also processing the right payment method in the right context. If you sell more expensive goods such as cars, you have a higher need for security, a higher need for compliance and making sure things work out also well on the reconciliation side. So eventually on the accounts where the funds are booked, there are a lot of more touch points that come like in the cash management world, which is kind of where banks have traditionally been strong at, and the infrastructure is there. Another topic is that we increasingly see is that banks have balance sheets and they can support a lot of the requirements in marketplace to provide liquidity, balance sheets, underwriting in certain sense. So a lot more, let's say, traditional banking services are being merged into what in the past PSPs have provided. And it's a complex field and requires some sort of customization. And from experience, those projects, as we heard also from Raluca and Mila, are not off-the-shelf solutions, but require a number of partners to be coordinated well, both externally as well as internally.
Thanks, Matt. Mila, back to you. Building on what Raluca said, Treasury and Finance being involved from the beginning, there might be people in the audience who think, I want to build a digital marketplace, or I have the assignment from my CFO to go digital. Where to start from them? And how about this struggle between you have your treasury view, obviously, IT might have or marketing has a customer experience. That's not always aligned. Who wins, or how to set the priorities? Too many questions, but happy to hear your knowledge.
I think they're just different facets of the same question, which is what is the priority that you are supporting for your organization? And commercial enterprises add risk to an organization, and Treasury is here to not only facilitate the commercial organization, but help de-risk those commercial enterprises. So I think ultimately it's just different lenses of the same question. So in terms of where do you start, I think it does come back to that first key question, is what is Treasury's role in this? And that might be very organizationally specific. So as I said, so we started with a policy, and it is enshrined in policy as well as in subsequent procedures and knowledge and headcount. So I think if you're going to start, you also really want to understand how far you are going to go down the road of carving that line of ownership out in the sand, because it will impact those subsequent decisions that you make, and it may also help the weighting of those decisions. In terms of what's important, absolutely your consumer and your customer experience is important, but experience isn't just the checkout experience. It is the fraud prevention, it's the ease of payment, it's the clarity and the choices that you may give them, but it's also in terms of if something goes wrong. So if there are chargebacks or if there are needs for refund, and potentially depending on your jurisdiction and your categories, there may be physical steps that also have to occur during delivery, and that all has to be catered for. So it's not just the checkout button, it's very much an ecosystem that you need to potentially have more understanding of than historically of doing an ACH payment. So I think that's also one of the key things I'd say, where does Treasury start, is understanding what your responsibilities are and where you want to place your flag, and then being ready to actually have the right people to go forth. In terms of how that overlays with some of the traditional expectations of Treasury, like cash management, I think what's also really important to be aware of is that not all payment providers are aware of how treasuries are set up or why cash management flows are actually important. So there will be some components of, as you're going through the market, if it's your responsibility to help select a provider, it could be a bank or it could be a PSP, it could be an aggregator. There are multiple different flavors of what you could go to get the end result that you want. You might have segregated what's called the actual acquiring might be very segregated. You might be responsible and completely separate to what you're doing for the gateway. So these are kind of some of the first places you need to start around what model are you aiming for based on what the objectives are that you're supporting on the business. I think that's key. And then figuring out, as I said, is this a significant revenue or profit contribution? And then your cash management considerations may be far more important than it's a complementary channel that supports marketing investment or supports engagement or supports reach out, or something that you want to grow, but it might take 2 or 3 years. So I think you need to also figure that out to determine what's most important for you, and therefore as your treasury function, what way you are supporting the business.
Yeah, no, makes total sense. Thanks. So much about the theory. Let's really dive into the use cases now. Right? It's the most interesting part. Raluca, you have implemented 2 different models. Can you please share the advantages and disadvantages of each of them, and obviously explain the models a little bit?
Yeah, it's true. I mean, we started raising the question. In fact, we started from the question, what do we need in the countries? We operate in 11 countries. Is the partner that we have ready to provide us the right payment terms and the right the payment methods and the right facilities we need in those countries? And we realized that is not the case. So we operate in Euro and non-Euro countries. Therefore, we had to implement 2 different models. And to be honest, now a 3rd one, just because our partner is not operating in Sweden. So we are in progress of building a 3rd model as we speak. But to come back to your initial question, the 2 models we build are first a digital marketplace model for the Euro countries, where we went to the wallet structure. So all our countries basically have a certain wallet that is open, where we collect all the money, where we kind of have the reconciliation happening. And this is the advantage of the model that we choose in the Euro countries, is that everything in terms of reconciliation happens with the help of the PSP, including transmitting the information to our sales platform in order to unblock the sale of the car and the delivery of the car, including the posting into our ERP, including the whole reconciliation of the receivables and the transfer of data to our treasury department. So all this basically is it happened because we set up a structure from the beginning where the customers would receive a sort of a 3-key unique identifier, allowing us to kind of reconcile everything and be able to ease the journey for the customer and for us in terms of payment. So we work with, of course, the virtual IBANs, we work with the order identifiers, we work with the 3rd key, which is a payment reference, and all this has been built in our e-commerce platform, allowing us, of course, to ease the journey down the lane. That's the first model for the Euro countries, where we see the advantage, of course, of the reconciliation, but of course, you have to think a bit further. The disadvantage is the money is not available right away. So for our treasury department, is not the preferred model. They are having difficulties to grasp the fact that the customer paid 2 days ago and we still don't see the money in our accounts. And of course, this you'll have to take into consideration. Nevertheless, we see the advantage of the reconciliation. We see the advantage of having a structure where we could see the details very easy and that is connected to our ERP. The second model that we built is on the non-European countries like Switzerland and UK, where also the customer is has a different behavior. In UK, they are very accustomed to do installments or payments in different portions, and then they would, of course, sometimes we would have difficulties in reconciling all this, and we've built a model where those countries have an account, a sub-account basically to the normal account, where we would give the right reference to the customer, where the money would arrive directly into our account. Is the preferred model for our treasury department. Of course, they are very happy to see the money instantly in our accounts. It's not the most preferred one for our accounting, neither for our sales department. Reason is, until the money is reconciled to the right order, it's blocking the whole delivery of the car. So we always need to find the right balance between, do we as a finance function take the burden sometimes of non-reconciling everything in time, or do we search to automatize so that we can ease the selling process and the delivery finally to the final customer. The other advantage of the second model is basically as well that we have full visibility into our transactions, whereas on the first model, being a wallet in between, there is a bit of structural difficulty to really get all the details of the transactions. We get everything from API from our PSP, we integrate everything, it works fine, but when it does not work good, and that's also what you need to consider, what if something goes wrong? It's harder to treat and to find the root cause. We worked with our PSP to also have a way to fast reconcile the worst case scenarios where the customer does not put anything and we can't know where the money comes from. And that's the beauty of a partnership like this, because we built something that was really, let's say, fitting what we needed. So that's the two scenarios, but as I said, we work on a third one for the Swedish market where our partner is not present.
Yeah. Interesting to hear the struggles in the process and the process being different in every country. Conclusion a little bit, you're strong as your weakest chain in the whole process, or the customer not providing a reference, sending you money without knowing who it is. I can imagine the struggles. Matt, over to you, because you played a key role in supporting the marketplace setup for Smart. What were the key points from a bank perspective that helped Smart to be successful in the digital payment strategy?
So looking at it from kind of retrospectively now, I think as Raluca alluded to, it's the patchwork also of regulatory requirements in each country that require a lot of more attention, right? That we from the beginning looked at it very carefully, because it is supposed to be a great user experience and the same across Europe. However, we saw differences, and I think that piece and understanding what is possible in each country and how this can be embedded or integrated then into the user experience was important. Also, I think having the broader group also of representatives also from the Smart side and ours on those teams, where we had representatives from the e-commerce teams that wanted to prioritize the user experience. At the same time, we had the accounting and treasury team who actually looked at security, which is kind of, it's also a key topic where we do not want to kind of make compromises. Another example has been the area around the reconciliation, and by looking into the process that, especially in a marketplace where in most cases you have a single incoming payment, and then you need to kind of reconcile this, and this amount could be the exact amount that you're expecting. It could deviate, it could come with a wrong reference number, it could come in different tranches. So all that work that comes with that, and being able to reconcile this and then link this into the ERP systems was one of the challenges that the team worked closely with. and also something that, you know, it is an extreme factor or that drives efficiency in the end-to-end process, and making some of those models really a commercial viable model versus something that, you know, creates a lot of overhead in the operations, which you eventually would like to avoid when building a digital business.
Yeah, very interesting. Mila, over to you. Raluca mentioned Sweden, UK, non-euro mainland. We're talking FX currencies, currency exposure. And a little bit the question, would you offer the client the user experience to pay in their own currency, in different currencies, but therefore creating risk with your company on foreign exchange? User experience, ease of payment versus
yeah, so our setup's a little different. So our settlement structures follow the legal entity structures that sell. So I think that's why I say it's really important to understand how we're selling. So we sell in ASPAC, Asia Pacific, Latin America, Northern America, Africa, and Europe, pretty much all of Europe. So we're in non-deliverable currencies and we're in restricted currencies, but we sell our merchant IDs are the merchant ID of the locally registered company. And that's partly a nature of what we're selling, but also what we're selling can be very explicitly regulated in a number of these jurisdictions. But from an FX side, for example, where we have had trade-offs is that I will end up with local providers. There is no way based on our footprint we're going to end up with one provider. It's just impossible based on both currency of settlement as well as preferred payment methods, which we'll come back to. But on the currency side, there are jurisdictions that we're in, such as Saudi or Serbia, where you could go potentially with a global provider, but they can't settle onshore in the currency of the sale. So that's where you start to introduce FX. Obviously, Saudi's a little bit easier with the USD. Serbia is not. So did I really want to introduce a payment provider that could take the payment in Serbian, but actually we're going to settle offshore with FX suffered for what is a tricky currency to begin with. So that does come into it for sure around the risk. I think the other components around looking at risk is what does it mean when you are settling cross-border for some of these jurisdictions. Some of that will be, as I said, dictated by the underlying legal entity structure of who is responsible for the sale. And then, as I said, the other component around, I guess it's more of a commercial risk, is those payment methods that you are actually offering, because there are some underlying, say, credit risks associated, and then there can be underlying financial risks, but there are operational risks of not providing certain payment methods because it really is fundamentally expected in that end market. And I think that's where that links to a different kind of risk as a treasurer, is what is the nature and who are you introducing as a counterparty into your group? And that plays out in two ways, which is just the assessment of who that third party is. Are you comfortable that in some instances it absolutely will be a local bank or a local aggregator because they are proprietary with regards to that payment method, or they have a very specific and quite large footprint in the market? And it can also be a different type of risk, which is that you're moving wallet away from your preferred bank panel who are supporting your balance sheet, or you're moving wallet away from your preferred financial service providers who you have a standing relationship with and manage as a financial counterparty in a relatively strict sense. So I think there are multiple ways to look at that risk, and I think there will be a balancing aspect, but I think depending on your ultimately your sales model and therefore how and where you settle and with whom, that is going to help you drive some of those decision criteria that you will need to balance, as we said, with user experience, payment method, scope, speed, and also just acceptance and understanding by your consumers or customers of who that financial counterparty is.
Yeah, interesting. I don't want to say dilemmas, but let's call them challenges. Let's move to the next section. Let's talk about challenges, and let's break up the audience a bit and involve the audience here. We've prepared a quick poll for them to poll the audience, to ask the audience what their challenges are. So what are the main challenges that treasuries face during the implementation of a marketplace? Please select all that apply. I think multiple answers are possible here. Influencing decisions, communication, mainly with your partners and stakeholders. Is it the type of strategic financial partners, your banks, PSPs? Is it about technology? or your risk aspect, counterparty credit or liquidity, or is it all about the rules, regulatory and security issues? Please vote on these, and I'm very curious to see the answers on this one. And then we'll quickly discuss them. So let's give it 2 more seconds. Kendall, if you could close the poll and show us the results. Okay, interesting. So the majority is about really the strategic financial partners and their offer. And the close second, it's all about the technological integration, also strong about credit and regulatory, and less about the communication. Very interesting. Matt, what do you think about these results?
I think I actually would have voted very similarly. One of the challenges we see when those marketplaces are built up, it is all about speed, go to market, and those kind of partners that are selected to get the first marketplace off the ground in a country, in a region, it's in many cases chosen with the PSP because they're easy to implement, because the product and the business development teams actually choose someone that can help them. As soon as those marketplaces tend to scale, you will be facing a lot of those issues and challenges that we were just discussing. And they come with the complexity of reach, like regional reach, as well as from handling those complexities and bringing efficiency in. So not too surprised, and I think it's an evolution of those marketplaces, those who are starting from, let's say, from a small scale and then growing to a certain size where actually you require further partners to get involved.
Interesting. And Mila, are you surprised that regulatory is not a higher percentage? Because for you, that would have been a main challenge.
So again, it's influenced by the industry that you're in, right? So the nature of the products that we have, they can be, for example, in the US FDA regulated. Or they're brand new to market. So they're going through a regulation discussion right now, and there's a lot of communication, there's a lot of education as we move into our new categories beyond our traditional categories. So I think for us, there is, again, a facet or a lens there that some other industries won't have. But I do want to say, I want to call out that as you move into new categories that may also be part of your strategic diversification decisions, not just your route to market, but what it is you're selling, that can obviously be something that is more or less of something that you need to work through. What I'm probably not surprised about is that there are challenges around what we would say our strategic financial partners, what they can and can't offer, and what the implications are for technology integration, both for your main, say, transaction of record, as well as the underlying technology that's being used to support the marketplace. So one thing that's not always understood or always known as you go into these areas, if they're new for your treasury function, is it's a very networked industry, right? It really is an ecosystem of partners. So some of the platforms that may be considered by your trade teams, your marketing or your sales teams with IT have very specific strategic relationships on the back end when it comes to the payment providers. And they do not always make it easy to integrate on purpose commercially and technically with providers that are not inside their preferred bubble of who they wish to work with. So there is a real give and take there. There are some providers that are placing themselves in sort of a niche position to be that sort of integrator when those relationships don't otherwise exist. And I think if you are a large global corporate, as we all know, we don't have one bank that supports us. We have a number of banks for many reasons, and they manage strategically, but not all of those banks are able to offer, say, acquiring services, or not all of those banks are able to offer a like-for-like service in the market, even where they may be your core bank, particularly if what you need is more of a retail type flavored service in terms of some of the payment methods. So I think there is a bit of give and take there, but I'm not surprised with the green and the purple bars. The blue bar, I think, really does depend on the industry that you're in, or if you're going into new industries at the same time as investing in new route to market.
Well, makes sense. Raluca, anything to add here? Was that also your starting point, strategic financial partners and the technology?
I mean, I think the nothing is surprising, to be honest, on the chart. The strategic partner, it is a challenge because, as both my colleagues mentioned, it is something where we have high expectations, or we want them to be able to do the regulatory and the credit checks, and to have a global footprint, and to be able to do that and that and that. So it's not easy to find, and that's why sometimes it is the challenge. I think it's important to know that when you are trying to build something from scratch, it's easier to build with the right technology. So for me, it's not surprising to see that some people are having hard times with the technology integration. There are sometimes very rigid structures that is hard. They're hard to break, or they're hard to change and to transform. And such a model, it is not easy to implement. And being able to bring the right partner in, I think it is the most important challenge, because that partner can do and potentially help you with all the rest, can help you with the right regulatory, with the credit checks, can help you with the right technology integration. But the big challenge is to find that right partner. So I'm not surprised at all. And I'm happy to see the first line where people are not seem to not have the challenge, where treasury is not involved from the beginning, because I think that's crucial. And I'm happy to see that's not a challenge in the industry.
Yeah, that one I was surprised about. I think that maybe that's because we've got a lot of people on the call interested, which is great in the marketplaces, and they're already heading down that path. I think for traditional businesses, I would have thought that was slightly higher, because it's also just the education that goes with it, as I said, around where do you draw the line in the sand around what you own versus a payments team, or is a payments team part of treasury now, or is it really your trade marketing team or your sales team that are responsible for certain considerations. So it is great to see if that is less of a concern for the audience at the moment.
No, I agree. It's all about the teamwork. If every team focuses on their specialities, work together, and then the project should be a success. Matt, if I can ask you, from a bank perspective, you see many clients. We heard about Smart, we heard about BAT, 2 different products. But let's make it bigger and more general. What are the main challenges that you see? Were they in those 5 that we presented here? Are there others? And how does the bank help the client to solve them? Because it's not always the client who can easily solve them. They might look at you.
So there's always 2 parts of that. So one is, I think, on the market side, on the demand. So also a lot of those digital business models who we have seen emerged over the last five years, right, with the ambition to grow and scale and see that hockey stick very, very quickly. They come to realization that, as markets tend to develop a bit slower in adopting new models, as the ideal business plan would foresee, it is one challenge that we look at and ask ourselves, why is this, and what could we do as a service provider to facilitate that? And if it comes to all the topics we discussed today, managing the risk and the challenges for the corporate, but as well as looking at the user experience, making it really easy to use, that's something that we have to get at par with tech companies out there who have been running marketplaces for the last 2 decades, who have generated a fantastic user experience and actually have in-sourced or built in-house a lot of those capabilities, which our clients in the past have not. So we see that clients who tend to in-source parts of that payment value chain because they believe it's core. It has to be some sort of governance around this, some controls, and then the payment service providers, the banks that work with, will be integrated into a more, let's say, internal and holistic gateway or technical integration, which make it easier for them to scale. We also believe that if the complexities, and we strongly believe the future is built for platforms, that means the interaction of various parties over a secured platform will and that has to be pretty much also open for a lot of players and easy to use, will win. And in order to be there, I think as we as the bank also realized, our processes need to be technically from an infrastructure perspective scalable, using APIs, using digital workflow solutions for onboarding, for KYC, all of that requires this digital business model to become successful. And I think that comes together with understanding where the market is, understanding also where the infrastructure as well as the knowledge within the banking space is in order to facilitate that. So in a nutshell, I think it's understanding that those business models, they are part of the future. We believe it's truly going that way, but it's still a lot of work to be done.
I agree. Raluca, hearing this, what Matt is saying, but what's the biggest challenge from your side still in your marketplace?
Well, the speed, I would say, it was and remains a big challenge for us, because we always wanted to, or from the very beginning, we wanted to go fast and be able to launch the country and a new product, and now to integrate even partners on our marketplace. So we are not looking only to sell our cars, we're looking to integrate as well vendors that could sell potentially tomorrow. That's what we are working on at the moment, the wall boxes for the customers to charge their cars at home. And we never stop. And of course, this comes with the challenge that the partner needs to be on board to follow our testing, to follow our integration, to be able to scale very fast. As Matt was saying, for us, the scale and how the speed at which we can scale was important and remains important from the very beginning. We worked only with API, we worked only with interfaces. We worked on building wherever our partner was not having a product, we tried to build a product to kind of fit into our needs so that we can scale up as soon as and as fast as possible. So that the speed was one of them. Of course, the management of the expectation was also something we will never underestimate. You know, the sales departments always want to go fast, want to bring payment methods that are all of them, if possible, as soon as possible, and with the risks that we all know. So we were able to, or we are still trying to figure out how to manage this. We are still not having all that we were supposed to have from the very beginning, so it's a challenge for us. We are still not offering our customers everything they are requiring us in terms of payment methods. We are still struggling with some regulatory deficiencies. We have struggles, for instance, on the return. Wherever, you know, the sale goes well, up to the checkout, everything is it's perfect. And when it comes to, you know, having the right to return the car within the 14 days and having to do partial payment to that customer, or even full payment, or even to return after a certain period of time. In certain countries, this is not possible. And we're facing difficulties that were there from the very beginning. We do not have a solution yet, but still we are working with our partner to find one. So it's all about, of course, technology challenges, regulatory challenges, the 2 points that you saw inside. It's also about the right partner, because, as I said, it has to be coming with us into this journey, and this is what happened. You know, testing every week almost, bringing a new functionality every week. Planning was a challenge, remains a challenge, to also free up resources from both our side and the side of our partner. You know, and the rest, having all the teams kept up to date. And we're talking even about the customer engagement center that we shouldn't forget. Sometimes we take decisions. We are, you know, happy treasury team, happy accounting, happy IT, everyone on the business side. But then when a customer facing problem arises, we should not forget about that aspect and educate the entire company about what decisions we are taking. So, of course, payment methods still a challenge. Of course, reconciliation, we still have a few things to improve, integrate additional business streams in our solution. But as I mentioned, it is all about the journey, and there were challenges, and there still remain a few.
Yes. Thank you. Very relatable challenges hearing from you. Let's move to the next part. Let's talk about people. We talked about technology challenges at tech PSP banks, but it's in the end the people who have to do it. Mila, I want to hear from you. what do the people in your team, what does a treasurer in general need to be successful in a digital marketplace space? Is it only the technical skills?
No, I think that's, what is it? There's hire for attitude, train for aptitude. So I think there is an aspect of there may be a traditional path that people have assumed what their career would be if you went, say, traditional cash and banking. And our team has evolved a lot beyond that. So it's also understanding what you need, as you say, to be successful, not just with digital marketplaces. I think it's the mindset of, it could be a digital marketplace today, it could be that you're doing blockchain tomorrow just as an underlying form, or it could be that you're moving towards, you know, some sort of other virtual backed product. I think it's about that the market is evolving a lot and the expectations on treasurers are evolving with it. So if we wanted to keep it specific for this one here, I think it's not just the technical skills that are associated with, say, good cash management, good liquidity management, and understanding those factors, or the technical skills associated with how does a provider plug into another provider. It's also the business partnering skills and almost the design thinking skills around what do I need to consider, because depending on the markets you are operating in, it can be a unique set of circumstances. But again, you need to boil it back to the essence of, what am I trying to manage here? What am I trying to achieve with my business partners? Who do I need to speak to? And what relationships do you need to grow? So within Treasury, obviously, as a business partnering function, you will have relationships across a number of functions. One thing I would call out is that your relationships with those functions may change, but it's also new functions. So I think Raluca called out, you know, consumer care lines or customer care lines. There will be training required for them, and there is a give and take around what you do and don't do. Your order to cash departments, or your, you know, the team that are doing the reconciliations, if you're traditionally B2B and they may be in shared services, it's actually educating and explaining them that your financial counterparty and the recognition point is actually different. For example, if you're taking credit cards, or if you are running wallets, explaining with your accounting team and tax, well, where is the wallet domiciled? What is the wallet? If it's a balance in wallet, how do you recognize it? Because it's not cash at bank, according to my GL off a bank statement. So there will be a lot of education that you need to go through that. So to support that, I think you do need really flexible people in the team, people who are curious and want to learn, because it will require a lot of that learning, you know, self-driven learning. But I also think it does mean that you also necessarily sometimes hire people from non-traditional routes into your treasury function, which is only a good thing, because you're exposing other people into the world of treasury, and you may cycle back out again into other functions as well, and they take with them a better understanding of that if they move back into a commercial unit, or, you know, they move into a different part of finance, or even into IT, which is where we've also hired people from, but with a finance background.
Makes sense. To all they get intertwined, mixed a little bit more. But if a team would want training, is it then training on the job, internal training, or do you put them on external courses?
It's a mix, right? So there's obviously external training if we gave a shout out to the ACT or any other body that, you know, has some of your fundamentals, but some of these areas move very quickly. So you can find external training, but in terms of what's right for the UK, when we talk about the faster payment scheme, right, and we talk about what's happening from a regulatory perspective on payments in the UK, is very different than Korea or Japan, and how payments work in Korea and Japan. So I don't think it's just that it's external training. I think there is a really positive part here that your bank partners play, whether or not your bank partners are going to be the financial service provider that facilitates the payment engine itself. So don't forget, you have amazing bank partners, hopefully, in these jurisdictions who can introduce you. They can bring other partners to the table. I think the other aspect of finding key partners in the industry are truly being that partner with them, and they can help keep abreast, or they'll do sessions with you. And it's finding those sort of trusted contacts. And yes, there are some external, but I think it can be really specific to those jurisdictions. The principles we've kind of done our own internal, so that we can explain to an end market, we can explain to legal and to tax, you know, because it's a new area for some of them around how this works. So we developed some of our own. We have used external, but we have drawn a lot on trusted partners externally to then really bounce that off and say, how does this work? And ask for sessions through them to be set up. So our banks and our payment providers have been very supportive in that regard. And as I said, there can actually also be specialist legal counsel. So you may find internally, this is not an area that you just keep hanging around, right? And your legal counsel around explicitly how payments work. that can be very specific, and it's very different than if you're issuing a bond or if you're doing some of your traditional aspects in corporate treasury, let's say.
Okay. Thanks for that answer. I like it. Matt, over to you. How about at the bank's perspective? Do we need more digital mindset bankers? How do you train your teams? And what do they need to be future-proof?
So very similar to what Mila said. So eventually coming down to two things. One is kind of getting deeper into the relationship also with our customers, understanding that it's not just a treasury function, but it's actually those functions that work with treasury on the business side, on the innovation side. And we need to better understand that our customer-facing staff needs to understand that it's happening basically on the business, on the market side, and we need to be closer part of that. So these are examples, being more present in those kind of conferences and any type of market developments where we understand what's happening, why are those business models evolving, and where can actually be potential for financial service to add value to. And also what I believe is strongly important, that we help also treasurers to empower them to have those discussions with their business people, giving them the tools and the information to their hand that they can bring and say, this is how we can actually add value in those discussions. And in some areas, in some corporates, as we know, it works very well without that. Some treasurers actually say, give me more kind of support that I can actually position treasury and the finance accounting department into those discussions more successfully. And the second point is when it comes to digital mindset. Yes, it's very much more important that I think the financial industry needs to start thinking like software firms. It starts with hiring people with that skill set. It's thinking about how our investments into infrastructure should lead into getting our products API accessible and being able to think about services that are software enabling the client processes. And from that perspective, that needs to be also it's kind of a different skill set. It's an evolvement of something that in the cash management business we've been always doing. It's a very much technology kind of driven business. But now with digitalization, with all the kind of new tools at hand, the skill set also starts to change. And having, let's say, talent from the market working on the banking side going forward will be a huge benefit in those discussions that we just discussed here in this round.
I like it. More even broader business partnering between not only treasury within the company, but also involving your banking partners and your PSP partners, and maybe even your software partners to look at the whole environment, basically.
And don't be afraid, sorry, just to reach out to other corporates, right? So if something Raluca has said that resonates, or me, reach out, because I think that's the great thing that I've seen in the treasury community, is that it's usually a very open flow of information. So I think that that's always something to leverage as well.
Definitely. I think most treasurers are open to share their experiences. Yeah, thanks for the addition, Mila. We are almost in the last final minutes. I haven't seen any questions coming in yet from the audience, so please feel free to keep them coming. We have experts here to answer those questions. Let's move to the final section of my questions. Let's brainstorm about the future. Raluca, I want to start with you. Do you think it's feasible in the near future or long-term future to have a fully automated end-to-end process where no people are involved, maybe pushing on some buttons and that's it? Is that reachable?
I'm sure it is, and I'm a true advocate of that, and I'm 100% sure that it's not far away from, the moment, the today that we are looking at. So we started, I can tell you that our cash buy at the moment is around 95% automatically reconciled, automatically orders are amended, payments are being reconciled automatically, booked in our ERP via API automatically, including the payment of fees. For the love of our treasury department, they're very happy to see that, and myself as well as head of accounting. Of course, we need to address those pain points where we still have the 5% on the unreconciled payments. I'm 100% sure it's possible. I'm with all what was said before, that we need to reskill a bit the workforce in order to be able to cope with that. It's not easy when you tell an accountant or a treasurer that from tomorrow maybe you're pressing a button. I'm not really the fan of pressing the button, but the idea of automating everything changes the way they look at things. They need to develop capabilities to analyze better and to use the data for the business partnering that that Mila was mentioning. The roles are evolving and the people need to go along with this, and we shouldn't forget about our auditors. This is not a system that they are familiar with. This is not a product they are grasping. The wallet is something that for them it's hard to understand how to put it and how to reconcile, how to test it, how to really get into it. So we should be, of course, ready to adapt our policies, to adapt the way we're looking at things. And I'm 100% for automatic reconciliation, but that means, what does it mean for our function? How do we transform our jobs? What type of skills we need to adapt? And of course, the rest will be a beautiful story.
Interesting, and thanks for answering one of the questions from the audience, Raluca. Or that might have been a coincidence, because one of the audience questions was about how to involve the auditors. Great. There's another audience questions. It's on KPIs. Mila, do you use any? Obviously relating to your marketplaces.
Sorry, yes. Yeah, well, I mean, there's some that overlap, right? So as I said, if you're working within the same structure, so let's say, for example, you talk about short-term cash flow, you would need to think ahead of time if there's going to be an impact, because if you're moving from, say, terms to prepayment, essentially pre-issuance, you don't actually have open items to determine. And again, it comes back to that. So yes, we have KPIs, and it's also about what's the implication on those existing KPIs. There are new areas to consider though, but this comes back to what you're actually saying you are responsible for as Treasury. Are you inputting into something that someone else is managing as a KPI, which may be the legal entity that's selling? Is it your shared services, as an example, that are responsible for the KPI? But again, you're educating them and then how they're going to manage to that. So depending on how you take your payments online, if we take a really easy one here and we talk about card payments, that is a fundamentally different way to understand, what your rejection rates are. If you have rejections around address validation, what was what's the dropping rates of your cart completion? What is happening in terms of number of chargebacks, which also, by the way, has an underwriting implication. How are you using tokenization? Is it card tokenization or network tokenization? How many cards are becoming expired? How many flipped over immediately? And what are you doing? Because from a rates perspective, you get charged for transactions whether they are successful or not, usually, depending on how you've bundled your services or your rates. So there are other KPIs that you would start to need to consider that you probably don't have traditionally. And as I said, may not sit with Treasury, but they are sitting with one of your providers that you manage. So for example, I am not, as Treasury, responsible per se for the KPI of failed payments, but based on the KPI of failed payments through P2P, it comes back to Treasury for us to work through what is going on and work with our bank partners as part of our service review. Similarly, if we're seeing a high rejection rate or failures around address validation, etc., that is stats that are coming from our service provider that might be monitored by the consumer care teams or the order to cash team. But then that's a conversation they have with us around, are we buying the right products? Or we're actually going to proactively have one with them and say, I don't think we're buying the right products. You've got tokenization, but this is not happening. So again, though, I think that really comes back to where have you drawn that line in the sand and who's responsible for what for managing that payment, not just as the project, but once it's live and you're in BAU.
Okay, thank you. We have 1 minute left. Final question for you, Matt. How does the bank of the future look like? And maybe some trends in digital marketplaces that you see?
So hard to answer this in 1 minute, but let me briefly say, I believe there's going to be an evolution of actually embedding more and more financial services into those ecosystem of marketplaces, and specifically on the merchant side, because the merchant eventually is becoming a key enabler for the markets to become successful. A lot of the banking services, such as accounts, cards, everything that you can actually start issuing once you have a proven identity of a merchant becomes, you know, an added value to the marketplace, to the ecosystem. I believe we'll see a lot of more, you know, services become accessible for those partners. But at the same time, you see more and better, let's say, payment methods that can cater for the collection side, right? For the right product, for the right client in the right region. We're going to see a lot more also kind of improved user experience in terms of the you know, real-timeness of services, right? They will be made available and the clients can use immediately. So with that, I think it's going to continue. I'm not going to go into blockchain right now. I think that's a very good session for next time to talk about, but I would leave it like this. Thank you.
Yes, thanks a lot. Thanks a lot, Raluca. Thanks a lot, Mila. I've learned a lot in this session. Thanks for sharing your insights. Marielle,
thank
back
you
to
very
you.
much, Patrick, and thank you, Mila, Raluca, and Matt as well for a fantastic webinar. I agree with Patrick. It's been great. Very good to hear your experiences, and I wanted to thank you, not just you, but the audience for being here, for their questions, and in particular, Deutsche Bank for supporting this event and the entire series. The next webinar will be in June, on how to repatriate and manage cash in complex markets with restrictions. So I urge you to stay tuned so that when we send the information, hopefully you will be able to join us again. Thank you very much, everyone, and looking forward to seeing you at our next event. Bye, bye, bye. Thank you.